All right. So kind of the point I was trying to make is that, you know, if you look at this chart, you know, it's basically very difficult to make any type of short play or take any type of short positions. And that's really kind of where I am looking at the macro is, you know, it's nice to think, yeah, we're traders, we can play the market both ways, but you know, it's just like everybody's trying to look for this move here, right? But is this even really tradable? I mean, you know, typically what you see though is you see a generational uptrend, and then you see these brief and violent contractions in the credit markets that just it's just not really that tradable. I mean, they first of all, they don't happen very often. They happen every few years. And then when they do happen, you don't necessarily know that they're happening while they're happening. And then once you realize they're happening, they're already done happening. And now your bias has flipped the wrong direction. You know what I mean? So it's just kind of, I don't know. It's like I don't even worry about trying to catch these moves. Like I just try to manage risk, and you know, you want to be aware that this can happen, right? And you want to manage risk, right? So that if you're in a long position when something like this happens, then you know you don't it doesn't ruin your career. But to like sit around and wait for that to happen and try to catch it is just not realistic, you know?
If I were to venture a guess or bet a lot of money, most accounts got destroyed by trying to catch the bottom and catch the top.
Yeah, yeah, without a doubt, yeah, 100%. Um, so
So, in a rampaging bull market, if you're trying to catch the top, I mean, you're gonna get burnt very strongly.
oh, yeah, yeah, exactly, and it happens to people all the time. And you know, this is a very good topic for a video. I mean, you can sum this up by it's a mental fallacy called trying to be a hero, right? Like for some reason, people want to be heroes, you know, and I don't know why it is. Maybe I guess maybe they grew up on watching Hollywood movies, or but you know, and in those movies, the hero wins and gets the girl and sails off into the sunset. But that's not how the market works, man. Like heroes get fucking destroyed in the markets. And if you've been in the market long enough, you know, you just have tried to be a hero painfully so many times that you realize like it's just not worth it. You know?
I think there's the concept of being a hero, but there's also the idea that you're smarter than the market. You always believe that you're two steps ahead,
Yeah, and or you want to be early, right? Not only do you want to be right, but you want to be right before everybody else,
and the market will always find ways to humble you, always.
without a
And
doubt.
the
Yeah,
most important quote that I've read, and I think Magic Mill has shared with us, is the market can stay irrational much longer than you can stay solvent.
yeah, 100%.
And I remember that when Bear Stearns in 2008 was bankrupt, like it took many more months after that for the market to start capitulating. Like when all news broke, the market still kept going up. And I can only imagine the amount of people just putting on shorts, and getting destroyed. And once all these accounts got destroyed, that's when price started to go down. I mean, there should be more stories. There's actually a very phenomenal, very good book. What's it called? Reminiscence of
Oh yeah, yeah, yeah. It's a good book.
of a stock operator.
Yeah. No, I think I think the best way to like not be a hero is to just lengthen your time horizon and don't lose the forest for the trees. You know, so and just kind of refocus yourself on that. So like I mean, okay, so what is the big picture? We're in a generational uptrend, in a generational monetary debasement period. Is that really a good environment to be taking massive short positions? Um, Probably not. You know, um, so from my perspective, if you're in that type, if you have that backdrop, right? If you have a generational monetary debasement, then the best the best trade is to get long after everybody gets liquidated. So if you have, you know, any of these big, you know, uh, down closes on the quarterly, you know, again, it just looks like one candle on the quarterly. But if you were to go down to a weekly, you know, um, there are people, people getting liquidated here, people getting stopped out, and yeah. So,
Are you trying to say you should buy the pullback?
well, I mean, if you just look below, like if you buy, yeah, buy the pullback essentially, but a macro pullback, right? Where like, so people will buy like an hourly pullback or an intraday pullback or even a daily pullback, but then when there's a macro pullback, you know, it's like the sky is ending and they lose the forest for the trees.
Absolutely.
But yeah, just again, going back to it, I know I've said this a million times, but you know, if you just bought every quarterly down close, that would have been the ideal scenario for a long position in the equities market.
Absolutely. I think the point that should be like screamed at the top of our lungs is we need to change our event horizon, especially like from if you're like a purely investor standpoint, you want to like uh, get uh, gain more of that equity or that thing that you think that has a lot of great value, short, mid, and very long term is broaden your event horizon. And I feel like dollar cost averaging is almost a cheat code. If you have a long event horizon and you just buy whatever you want to buy every month a little bit or every 2 weeks a little bit, like, what are your odds of losing? You know what I mean?
Yeah. No, I think again, just like going back to what we were saying earlier with the like you, it's just like people will get short after the market has retraced 50%, and it's like, okay, the market's retraced 50% in a generational uptrend. Is that really how you want to be playing the market? We'll just go to the Bitcoin chart just as an example. I mean, so you look at we'll go to Bitstamp just because it has more history here, but you think about this, right? Like this is the chart that is the most important in my opinion. And if we're just honest and you're looking at this chart, you know that at every the low of every candle, right? You have to People are getting bearish, right? So people are getting bearish. And sometimes there are a few times where that works, right? There's a low of this candle and this candle where it's a good idea to get bearish. This candle and this candle. There's a few times in the market, but so there's four times, maybe five times out of what 40 quarterly candles, and it's just it's just the way the market works, right? I mean, they get you have to listen to people get bearish and at the exact inopportune time to be bearish, and they're pretty confident about it, and they're pretty. And sometimes they're right. Sometimes the market does sell off more, but then the thing is they like use that as justifying increased bearishness, right? Where you want to do the opposite, right? I mean, if price is sold off 50% and it sells off any further, you don't want that to strengthen your bearish bias, right? That is,
No, no, absolutely. But I think a cool video would be how much is counter market sentiment a valid edge? I'm pretty sure it is. I mean, the famous Warren Buffett saying when people agree to like sell and when people are fearful of buy, in a sense, I'm probably destroying the the sentence or the saying,
yeah.
but I do believe that there's a whole edge of counter market sentiment.
Well, market sentiment now is definitely bearish. That just
Effing bearish. Absolutely.
just on a macro level, people, maybe rightly so, are getting incredibly bearish off the interest rate hike predictions of the Fed. And yeah, I mean, that that's a situation where if if those expectations change suddenly, right, you have market sentiment leaning one direction, expecting a certain outcome. And if reality like is contrary to that, that sets up, all those people who are bearish, or maybe they have, you know some type of sell side exposure, anything, some major position like that. They're going to be offside if something changes in the macro environment, and it wouldn't take much for that to happen. I mean, all it would take is, you know some other event, right? I mean, like, this is generally the way that the Fed works, right? Is they'll inflation will increase, and then they'll raise interest rates and talk about raising interest rates, and then they have this plan for raising interest rates, like in 2017, and they raise it by like, a couple, few fractions of a basis point, and then they do massive money printing for some other reason. And ultimately the reason is just that the government needs money, right? So they won't say that, right? They'll try to do a better job of justifying it, but yeah, there will be some other crisis in the future. I mean, generally just move from crisis to crisis. So we just had the COVID crisis that was used as a justification for money printing. And there will be some other crisis in the future, that will justify money printing.
Like a war.
Yeah, yeah, like a war. It might not be,
Historically, wars are big money printers.
yeah, but the idea is that they're not going to say like, oh, we're just expanding the money supply and creating massive inflation to fund the government that doesn't really spend it in your interest. They're not going to say that. They're going to say, well, we have to for COVID. Well, I mean, like, does money printing solve COVID? You know, I don't see that connection. You know what I mean? And like now you see it with, you see them sort of laying the groundwork with the especially the ECB, the European Central Bank.
Hmm.
They have included into their mandate protecting the environment, which,
Which is so idiotic.
well, yeah, I mean, it doesn't make sense. I mean, like, yeah, but maybe there'll be an environmental crisis or something that they'll use to justify, you know, printing money. I don't know. It's hard to predict those things, but what I can predict with certainty is that there will be another crisis, right? There will be some event that is used as a justification to print more money. I just don't know what that event will be, you know.
I mean, there's a world that we might be at the doorsteps of it if in a scenario where this war escalates, NATO and intervenes, big pressure on the states in North America to come and help Western European allies. I mean, there's a scenario.
Yeah, that's a very real and valid scenario. Um, yeah, or it could be something we don't even we
Oh,
just wouldn't be able
for
to
sure. We don't
predict.
even see. We
You know what I
cannot.
mean? Like in the same way that you and I couldn't have been sitting around in 2018 predicting COVID and COVID crash. I mean,
Oh no, absolutely
it's
not.
like one of those things, right? Where um, it's a weird dichotomy of like you, you almost know for certain that it will happen, but you just don't know what it'll be.
It feels like it's a sense of inevitability. Like these things will occur, and then it's all about how you play these events and how you play these moments, and are you on the right side of the equation or not?
Yeah, I mean,
Because I'm pretty sure welts were made in the COVID crash, and welts were made buying Bitcoin at 5, 6K and 7K. So
yeah,
I guess
yeah,
it's
definitely,
how do
yeah.
you play these moments?
Yeah, well, I would just how to boil down this whole video into something constructive is if you're building a portfolio or you're building a a spot position, this is not really tradable stuff. So that's an important distinction, right? Like if March 2020 is happening, I would not be trading it. It's cool to think that you'd be one of the guys that make a shitload of money trading leverage during that, but the reality is you'll probably get fucked and it'll probably be a really bad experience. The more responsible thing to do during those times is to not be trading or to at least not be taking trades. But it's a good time to build a portfolio, right? So when everybody else is getting liquidated and everybody is singing from the rooftops that the bear market is here, that's the best time to be buying equities or Bitcoin and building that spot portfolio. Not necessarily trading,
Absolutely.
but just building the spot portfolio. So I think that's a really important distinction. I don't want anybody to think that I'm suggesting like you start trying to build leverage positions trading the 15-minute chart during March 2020. I'm not saying that at all.
I completely agree with you. That's a very good point.
you know, um, this is more like long term position, and then holding that, uh, holding those positions for a long period of time, right? And it's really important, especially when you get to a certain size. You want to have long term positions, right? Because the tax, depending on your country, I don't know what Canada's tax law is, but in America, long term capital gains is way more favorable than short term. So, you want the majority of your exposure to be in long term capital gains so that when you do sell, that, you get a much favorable tax rate. So, you know, it is trading, but it's trading with like a high, a very high time horizon, right? And trading the macro. So like if we went to the stock to flow chart, you would see that, that's the type of trade I'm thinking about right now.
Absolutely. It's a very good point. And I feel that we don't have sometimes the wisdom, and obviously we don't have the patience to zoom out
Yeah,
to look
man,
at the broader
it's
picture.
very hard. I mean, if you think about it, like if you were in Bitcoin at that time during the March 2020, you would have probably been thinking, well, the halving's coming up. This is a very good time to be bullish, and price cuts in half very very quickly, even more than half, really. And you know, it's very difficult to have the presence of mind in those moments to know that that's a good time to increase your spot allocation. I certainly didn't feel that way when it was happening, but it's one of those things where if you go through it once, if you experience a capitulation like that one time, then in the future you're less like you're going to be able to identify like, oh, this is a capitulation, this is what's happening, this is what I do want to do, this is what I don't want to do. And yeah, it's just all about experience, you know, just being in the market.